Hello everyone, welcome back to Neffy Cat. We're so glad that you can join us today. So today I want to talk about volume. You're going to hear a lot of people mention how important volume is in a stock's measurement. Volume is something very simple. It's just the number of people that are buying or selling into a stock at any given period of time. So it will remind you of the price action in that it is a measure of a unit of time, just like a candlestick is. There are a lot of times volume charts on people's brokerages that we can look at, and you can also kind of guesstimate it through seeing the size of the volume bar here. I have a restless kitty. Yes, I do. But you can see it by the size of the volume bar here. Hi, little one. Yes, I really do have a restless little boy. Yes, I do. I have a demonstration here that I want to show you here to point out something important about volume. So the more people that buy into a stock, the higher the volume is going to be. You're going to be seeing the bigger candlestick, so to speak, or the bigger marker. And then same for the lower, the larger the mark, you're going to see that larger candlestick there, or in this case, that marker. And another thing about that is that you're going to also notice that when there's a high red volume, that your stock price is crashing. And that when there's a high green volume that this little paw is on top of, you're going to see that stock price rising. So something that can happen that volume reflects. Volume will show you emotions like FUD happening in the market. Sometimes when you see a big giant sell-off, everybody's going, this price is too high, we're gonna leave this stock. And they get a bunch of FUD. Maybe the inflation rates have just happened in the market. Yes, and there's shares being spilled in overload. And so people will be selling out and panicking. You'll see panic selling and you'll have high volume. And then you'll also see, once you have that big rise happening, you'll have the opposite. So once it's crashed and people are starting to feel confident again, they'll say, oh, let's buy into this stock. We can do it. We can make this work. Look at this price rising. And you'll see higher and higher numbers of people buying into the stock, and that price will go soaring. So as you can see, volume is really one of the important things to pay attention to in stock trading. And it is extremely important for anybody that does anything like day trading, momentum trading, growth stock plays, and so forth. On another note, when you're seeing too little volume, a lot of times that is an indicator that that price might fall. So you can't expect a big spike in price in a stock. You can't expect it to go up so that you can sell your shares if you don't have high volume. So it is really something to watch for. Another thing that I learned myself is to never buy in under 200,000 volume on average, because if you try to sell your stock and let's say it's hit the high and then it's coming back down and you're wanting to sell, it's a lot harder to get it sold. In fact, you may not be able to get the price you would want for it. And also another thing you'll see, I've explained this in the past, but sometimes people can really get carried away and panic sell or FOMO buy, fear of missing out buy. And it'll be so intense that it'll pause the stock on the stock market momentarily. Usually that's for a few moments. But you can get a really good idea of where those momentum plays are, because people can get so carried away with either panic selling or FOMOing in that they'll cause the stock to freeze on the market. All right. Well, thank you all for sharing with us today. Thank you. Don't forget to take those paws pause and hit that like button if you like our content. And you can hit the notification bell, and you can hit the subscribe button. Please also consider sharing this video with others so that they can learn about this topic too. Thank you all so much, and everyone have a wonderful day. We'll see you in the next video.